JBlog, February 7th, 2010. Must say I'm a bit disappointed there with the action on Friday. Um, on the other hand, of course, if Friday had gone the way it was going before, it could very well have led to Black Monday. Because with a drop like this followed up by another drop like that, let's say we would have topped out at um, 1,030 or so, everybody on the weekend would have gone, oh my god, and Sunday morning it would have been sell everything. So Monday could have been very ugly. So I see the PPT here. No doubt about that. This is government interference in the markets, propping them up. Question is, will it help? Um, will it? Is it there to deflate the bubble a little bit slower? Um, Is it going to start a new rally that's going to cause an even greater drop sometime in the future? Do the gods of Washington and Wall Street believe that they can stop this thing and pretend that everything that's going on is not really happening? We'll see. I'm obviously not too bullish that particular on that particular front. Let's have a look at the intraday. Basically, what happened on Friday. Um, we had a drop in the morning until 10 o'clock. Then we had a rise. This was the unemployment data that came out that was supposedly better and was supposedly showing that the recession indeed is over and companies hiring is just down the road, which it is not. Small businesses account for 70% of the labor market and they have no intention of hiring this year. So the only place we're seeing a partial recovery, I suppose, is in large corporations that obviously have been bailed out, and some of them are flush with cash at this point. International markets, any company that has exposure to the international markets, is obviously doing better than small businesses, but the Fords and the GMs and the large businesses like that will not get us out of this recession. It is small business that has to hire, and small business simply isn't hiring at this point. So looking at the details here, this is oil. Oil was in an interesting uptrend for the last, what is that about? That's a yearly chart. So was in an uptrend for the last 8 months, and has, well, actually, I mean, it was an uptrend much longer than that, but it was in this nice channel here. That channel has been broken to the downside, and it would have violated this low here if it had not been for the action on Friday. A large part of that is in the US dollar. Here's the US dollar chart for the last year, and obviously the US dollar was capped a little bit here, which allowed a lot of the commodities to rise. This is basically a panic. People are panicking out of the euro, and the only other alternative besides the euro is at this point the US dollar being the largest. So it's not a question of whether it's a solid currency, it's a question of is it more solid than what one is in right now. Gold. I have been I've been looking at gold. I picked up a little bit gold here, a little bit too soon, I must say. It dropped further. I picked up a little more on Friday at the lows right here. I keep saying I never mind being in gold because gold is the only real money that isn't an exposure, isn't a debit on somebody else's balance sheet. Silver I like as well. Again, I picked up some here and I picked up some over there a little bit too soon. I'm just looking at the US dollar and I'm thinking there should be a pullback in here somewhere at some point. And that will of course be to the advantage of oil prices, gold prices and silver prices. I covered my oil shorts a little while ago. I covered a whole bunch of things. I sold out of my STLD, steel options, quite nicely and profitably. Um, a few more charts I'd like to look at because I find them interesting is here's the gold versus oil ratio, i.e. how many barrels of oil does it take to buy 1 ounce of gold. Um, that has been swinging up and down, but it's basically in a range of 12 to 16 at this point. Definitely still very much um, on the side of gold historically. Um, the VIX, one of my favorite indicators, is showing some fear re-emerging into the market, but certainly not as much fear as um, I believe one should have. The TED spread looks roughly the same. There seems to be no interbanking fear at this point. This particular one here, I was commenting that day that that happened, whether we were looking at a VIX downside capitulation. And until this point, we haven't surpassed this, and we have made a higher high. And here, if it hadn't been for Friday, we would have made a higher high as well. So keep a close eye on that. Natural gas isn't doing much of anything at all. It continues being flat. Gasoline has had a bit of a down day, but it too is just tending between the 220 and the 180. Nothing particular there. A few interesting things here. What am I looking at? This one is surprising. Home builders index. Just considering that there is so much oversupply in the market, I do not see there being a need for a new house being built for a very long time, and yet home builder the home builder index just refuses to break down. Um, so that's again one of those weird things. Internet index has definitely broken the uptrend, and that was one of the most solid uptrends there was. That might be because of Google. Software index looks similar. Again, software ugly. Um, then we have shipping. Okay, this is retail. Again, retail index is rolling over. So finally, there's some recognition that a bankrupt, overextended consumer can no longer buy the way that they bought a while ago. And we see a lot of the breakdown in the shipping indexes as well, the transportation indexes as well. A recognition that there will be less shipping because simply there will be less buying. Materials, ugly. Energy, not as ugly as materials, but still pretty ugly. Financials, certainly nothing to write home about. Industrials, again, pretty well every subsector got hit. Technology, quite ugly. Like technology is what led us out of this back in March and April. There was a bounce in technology because there was a bounce in copper, and now for technology to drop so strongly is certainly not a good sign. Utilities will be a great deal once they have dropped substantially more. Utilities on average pay about 5% dividend at this point, which is a fantastic rate, better than anybody else. And once I see a further drop in utilities, I wouldn't mind stocking up on some for long-term kind of income strategies. That'd be interesting. But anyways, that's all I have for this week. Hope you are well, make lots of money, and have a good week.